A new global investment map shows how China has spent more than $1.5 trillion overseas in the last 20 years, and the numbers reveal some striking trends for India and the region. According to the China Global Investment Tracker, the United States remains the single largest destination for Chinese capital, attracting more than $204 billion since 2005. Despite political tensions, Chinese firms still invested nearly $4 billion in the US in 2025 alone. Across Western Europe, China has focused on stable, regulated sectors, power grids, ports, logistics and manufacturing, with the UK, Switzerland, Germany and France among the biggest recipients. In the Indo Pacific, the strategy shifts to resources and supply chains. Australia leads with more than $108 billion, driven by mining and energy. Indonesia and Singapore each attracted over $45 billion, reflecting China's push to secure minerals and regional logistics hubs. And here's the India angle. China has invested $17.3 billion in India over the last 20 years, slightly more than the $16.6 billion invested in Pakistan, despite Islamabad being described as China's iron brother. The gap is narrow, but it underscores a key point. Even with political tensions and investment restrictions, India's market size and digital ecosystem have drawn more Chinese capital than Pakistan's infrastructure-heavy model under CPEC. In Latin America, Chinese investment is targeting access to commodities. Brazil alone has attracted nearly $79 billion, including more than $7 billion in 2025, mostly in energy and infrastructure.
We have no commercial preference between China and the United States. We want to have relations with China. We want to have them with the United States. We want to have them with Russia. We want to have them with France. We want to have them with everyone.
Across Africa and Central Asia, the strategy is infrastructure for resources, ports, pipelines, power plants, and mining projects that secure oil, gas, and critical minerals while expanding China's Belt and Road footprint. Behind much of this activity are China's state-owned corporations, using overseas investment to secure resources, build influence for China's long-term economic ambitions.
Value-added industrial output at above-scale firms rose 5.7% year-on-year in March and increased 0.28% from February. The Manufacturing Purchasing Managers Index stood at 50.4 in March, up 1.4 points from the previous month, while the index of expectations from business operations reached 53.4. In January and February, industrial firms above a designated size posted total profits of 1.02 trillion yuan, up 15.2% year-on-year.
China is one of the world's most strategic global investors. India will always be a key part of any investment map, even as geopolitical tensions reshape the flow of capital. The Economic Brief, DD India. Well, Dr. Vashisht, how would you assess the Chinese investments in the United States and in India from an economic point of view?
So, there are a couple of things which we should keep in mind. One, it's now very much clear that China has emerged as the leading investor abroad. And if you look at the kind of negotiation which is going on at WTO, investment facilitation is one of the things, and China has been the prime mover behind this. Okay. They want to have that agreement there because that secures their interest abroad. Now, so the issue is why they are investing in India and US more and vis-a-vis Pakistan. So here there is a difference. But investment goes in different countries for different motives. Like in US and in India, it's basically market seeking because these are big economy, thriving economy. So it's basically market-led investment because there are returns. While in Pakistan, it's basically strategic investment. Even if you want to bifurcate, in US, a large chunk of this investment has gone to acquire technology. They are acquiring US firms which are doing well in the field of technology.
So it's more into acquisitions and more for the market.
Yes.
Dr. Javadekar, how crucial are these investments for Chinese manufacturing and also for the global supply chains?
Absolutely important. China outward FDI last year, 2025, is to the tune of $175 billion globally. So China, Dr. Vasist pointed it out clearly that China, Japan, both, but China especially is an important investors in the world in technology, in energy. And for India also, I mean, if you look at some of the successful stories, unicorn stories, or the startup stories in India, Delivery, Zomato, and many others, have been backed by Chinese venture capital funds. And to that extent, China has played, at least pre-2020, China has played an important role in supporting some of the growth in Indian startup ecosystem as well. So these are important investments. Just a point about comparing India versus Pakistan. India is 8 times bigger than Pakistan in terms of its size, in terms of its GDP. So maybe on nominal basis, India might have over last 2 decades received only marginally more FDI from China. For Pakistan, China is a very crucial partner because half of its FDI comes from China.
In percentage terms, it's much more for China, for Pakistan, you're saying. But we leave it there. Thank you very much, Dr. Vasist and Dr. Javadekar. Thank you for helping us understand these 2 important stories.